$79,000. That is the asking price for a 3-bedroom, 2-bathroom home with approximately 1,835 square feet, sitting on roughly 0.36 acres in Ward, Texas. At roughly $43 per square foot, this is priced below what it would cost to rebuild something similar today. It includes 2 fireplaces, original built-ins, a covered carport, a corner lot. No homeowners association. On paper, that sounds like hidden upside. But once you look closely at the wood-paneled interiors, the aging kitchen, the soot-darkened brick fireplace, the dated bathroom finishes, the worn flooring, and the overgrown front yard framed by mature trees, the real question becomes unavoidable. Is this undervalued character, or is this deferred maintenance disguised as charm? In this breakdown, we will analyze what the listing wants you to believe, what the photos actually reveal, what a disciplined renovation would realistically cost, what the local market suggests about exit risk, and whether this deal protects capital or traps it. Later, I will show you how this house could look after a controlled, low-cost transformation. Not a fantasy renovation, not a television makeover. A disciplined repositioning. The final verdict comes at the end. If you prefer controlled risk over emotional decisions, stay with me. What the listing wants you to believe. The listing leans heavily on space and potential. Nearly 1,835 square feet. 2 separate living areas, 2 fireplaces, a large yard, built in 1950, public utilities, central air conditioning, no restrictive association. The narrative is simple. This house just needs some help. It highlights the built-in shelving around the brick fireplace as character. It frames the corner lot as desirable. It emphasizes the size relative to price. The message is clear. Buy low, renovate lightly, unlock value. But marketing language is always optimistic. Photos are evidence. What the photos actually reveal. Let's separate fact from inference. Fact. The living room features full-height wood paneling on multiple walls, built-in shelving, and a brick fireplace with visible soot staining above the firebox. Inference. The interior aesthetic is heavily dated. Modern buyers often associate full wood paneling with older homes that require updating. The soot pattern suggests frequent fireplace use, which is not automatically negative, but does require chimney inspection. Fact. Flooring appears inconsistent, with areas of worn hardwood, aging carpet, and visible surface wear. Inference. A full flooring replacement would likely be required to create cohesion and market appeal. Fact. The kitchen retains older cabinetry, laminate countertops, minimal upper storage, and basic appliances. Inference. Functionality may still exist, but visual competitiveness does not. In most resale scenarios, cosmetic kitchen updates would be necessary. Fact. The bathroom features basic tile surround, an older vanity, dated fixtures, and visible wear around trim and mirror. Inference. While serviceable, it lacks modern appeal. Moisture integrity around the tub surround should be evaluated carefully. Fact. The exterior shows aging siding, mature trees close to the structure, and a carport with exposed framing. Inference. Exterior paint, tree trimming, and potential structural reinforcement of the carport may be required. None of the images suggest catastrophic structural failure, but none suggest turnkey readiness either. This is a cosmetic-heavy repositioning opportunity with moderate age-related risk. Optimized rehab strategy. Now let's approach renovation through 3 disciplined paths. Cosmetic minimal. Objective. Change perception without heavy capital expenditure. Paint all paneling in soft neutral tones to eliminate the heavy wood effect. Replace flooring throughout with durable luxury vinyl plank. Update lighting fixtures and ceiling fans. Paint existing kitchen cabinets instead of replacing them. Install new hardware. Upgrade countertops to affordable modern laminate or entry-level quartz. Replace the bathroom vanity and mirror. Service existing fixtures. Pressure wash the exterior. Paint siding if structurally sound. Trim back trees. Remove dead branches. Improve landscaping for immediate curb appeal. Estimated renovation range, $18,000 to $28,000. After this level of improvement, the home transforms from dated small-town property to clean, cohesive starter home. The fireplaces become features. The built-ins feel intentional. Rent-ready practical. This adds electrical updates where needed, plumbing fixture upgrades, chimney inspection, HVAC servicing, and possible selective window replacement. Estimated range: $28,000 to $45,000. This prioritizes durability and tenant longevity over aesthetics. Controlled value add. This includes a modest kitchen reconfiguration, updated appliance package, full exterior repaint with trim modernization, partial window replacement, and stronger landscaping presentation. Estimated range: $45,000 to $65,000. Beyond this, you risk overcapitalization relative to local resale ceilings. Neighborhood intel. Ward, Texas is a small Central Texas community. It is not a high-growth suburban corridor. This is a slower-paced market with limited transaction velocity and modest price ceilings. Buyer demand likely consists of local families, entry-level homeowners, and smaller investors. Walkability is limited. Employment drivers are modest. Appreciation is steady, not explosive. The opportunity here is entry price. The risk is liquidity. In smaller markets, resale time matters more than appreciation spikes. The real math purchase price: $79,000. Estimated closing and holding costs: approximately $6,000 to $10,000. Total acquisition basis: roughly $85,000 to $90,000. Under a cosmetic minimal renovation, total investment may land between $103,000 and $118,000. Under a rent-ready strategy, total investment may range between $113,000 and $135,000. Under a controlled value-add plan, total investment could reach between $125,000 and $155,000. Now consider resale. In similar small Texas markets, updated homes of this size may conservatively trade between $135,000 and $165,000, depending on finish level and demand. That creates a potential margin, but only if renovation remains disciplined. Rental potential may realistically fall between $1,200 and $1,450 per month. At $1,300 monthly, annual gross income equals $15,600. After property taxes, insurance, maintenance reserves, and vacancy allowance, net operating income could reasonably fall between $9,000 and $11,000 before financing. At a total basis near $110,000, that produces a moderate but acceptable yield, assuming vacancy remains controlled. Over-improve this property, and the margin disappears quickly. Living scenario. This home could suit a buyer seeking affordability, yard space, fireplaces, and character over trend-driven design. It would not suit someone expecting rapid appreciation or urban convenience. This is stable, not speculative. Rental scenario. As a rental, this property could perform steadily if priced correctly. Maintenance risk is moderate due to age. Vacancy exposure is higher than dense urban markets due to smaller renter pools. However, low acquisition cost provides downside protection. The primary risk is exit liquidity, not structural viability. And that brings us to the verdict. Final verdict: smart buy, but only under disciplined renovation and realistic exit expectations. This becomes a value trap the moment you treat it like a high-growth suburban flip. Buy it below market, improve it efficiently, exit conservatively. Final spark. Would you rather deploy capital into one higher-priced metropolitan property or two smaller, lower-entry homes like this with controlled exposure? Comment your strategy below. Smart investors study deals before they commit. That is what we do here. Subscribe to Housing Intel and stay tuned.